Okay, good morning, everybody. So welcome to the Forex Trading Asia Daily Currency Call. So this is the currency call where you will get economic updates, key support resistance levels, trade ideas, and more. So this webinar is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. So let's get started. Today's currency focus is pound, but before we get into the currency focus, let's get some idea on the RBA rate statement released yesterday. So today we are with Daniel, coach in LCMS Traders. I'll pass the time now to him to check on his analysis on the RBA rate statement. Daniel.
Okay, hi, Jinwei. Okay, that's a good question here. Let's see what happens yesterday. Okay, so yesterday RBA rate statements came in, no major change was expected. They don't expect interest rate decision change. However, let's take a look at what was written in the rate statements. The rate statement, you can see, there's a whole lot of things coming in here, but really interesting is they still put it in as the economy recovery is very well underway and much stronger than expected. That means it's doing well. The economy recovery is doing well. Unemployment rate has dropped to 5.8%. A lot of people are getting their jobs back. GDP is increased to a strong 3.1% in December and expected to do well as well coming quarter. Boosted household consumption, health. So they said economy is expected to recover and above trend growth, right? So that means above than expected here, and so everything is good. Only thing that they were saying that yes, even with the jobs coming in, the wage pressures are still not there. That means the wage is not increasing as much as it likes to be. So in fact, what this means is the inflation may not be as high as they like it to be of 2%. So what all this means is that most likely they are still trying to hold on to the interest rates. Right now, to them is all these fiscal policies and monetary policies coming in are supporting the recovery, and so they probably will not be looking and with the inflation not hitting the 2%, they most likely will not be increasing the interest rate anytime soon. And in fact, if you look at it, where is the earliest they do not expect the conditions to be met, all these inflation targets, employment gains, significant employment gains, wage growth coming in, did not expect until 2024. So you won't be expecting an interest rate increase all the way to 2024, which means it's about in 3 years' time. Then there's a possibility of looking for an increase in the interest rate. However, with this growth here, we will be expecting Aussie dollar to be quite strong still comparatively to the other currencies market. Of course, with the US coming in with all the stimulus package and what President Biden has been talking about the infrastructure, we'll have to take a look at the comparatively there. But overall, Aussie is world recovery expected to be strong, so overall the economy could be looking quite good. However, if you do take a look at what happened in the chart yesterday, in the chart here, they didn't move much. It did little, somewhat have a movement, and overall you can see that there is a strengthening of the Aussie compared to the US dollar. Of course, yesterday US dollar did come in because the past 2 days they did weaken as well because of the drop in the 10-year treasury yields, and of course in the stock market improvements there, so causing some slight weakening in the US dollar from there. Okay, so that's something about Aussie USD. So overall, we could see a relatively strong Aussie US dollar, probably holding around the same level here, or maybe slightly moving a bit higher. Okay, yeah.
Okay, thank you, Daniel. So in short, we are looking at a hawkish statement. Okay. Okay, hawkish but cautious. So looking at short to mid-term strength in Aussie. Yeah, so as you guys know, the currency call is usually Monday Aussie and Kiwi, Tuesday Euro, Wednesday Pound, Thursday Yen and Gold, Friday Canadian Dollar. So today is Wednesday. We will be doing the Pound. And now I'm just going to pass the time back to Daniel for the currency call for Pound. Daniel.
Okay, yeah, I'm back again. So looking at the statement again, let's take a look at what's happening past days. Monday, as expected, nothing really happening here. Tuesday, if you look at Aussie rate statements, that's what we talk about. You also see the jobs opening, US job opening. Didn't impact too much, as I mentioned yesterday. Mostly, especially on the Monday and Tuesday, was mostly affected by the stock market, the US stock market improving, and the drop in the treasury yields, resulting in a slight weakening of the US dollar. Okay, looking in today, anything related to pound, we have the euro, all the service PMI, but probably will not be impacting so much in the details right now for the PMI, service PMI. There is also the composite PMI and service PMI coming on the pound. We could be probably looking at this. Of course, if we look at what's going to happen in the market in UK, right? It's improvements in the COVID-19 overall. They're going to go into the I can't remember which phase stage where they're going to open up, and even looking at whether people are allowed to come in or to visit UK for business or leisure as well. However, everything is moving as per plan. Okay, so looking at this one, we're probably in some movements at 4:30 today, service PMI. But if it's going to hold at around 56.8 or so, then it'll be maybe quite muted there. Thursday, but most importantly, right now, they could be today after late night. We're going to be muted a bit because FOMC meeting minutes at 2 o'clock in the morning, Thursday morning, coming in. They'll probably be everybody will probably looking at these meeting minutes. Why? The previous meeting minutes and FOMC, they'll be talking about inflation is doing well, seems some form of recovery. However, Powell did mention about jobs. Now he was worried about the jobs were not improving. However, if you remember the NFP last Friday, can I get that up here? I think so. Friday, and you see NFP numbers was doing very well. Let's see, where's my NFP numbers on this Thursday? Sorry, NFP. Yeah, non-farm was 916K, well, compared to the 647. Very well here, but of course, like what happened in the Aussie news as well. Average earnings, the salary earnings, is not improving at all. So overall, we have to take a look at these statements here coming in, which will affect the FOMC. Now, with this here, do we expect, ask them, they say they're going to increase interest rate? Nah, I doubt so. However, we will have to read the statements from them and listen to his statements. Is job growth really the primary concern right now, especially with NFP numbers have been improving so well? Is he going to say that with the job growth I will see a 2 or 3 more improvements or salary improvement before I even consider interest rate? We have to take a look at that, right? Okay, as well. So we have to see the rate statements, and I think if the rate statements are going to be very bullish, and he says that maybe I have to pull in the possible interest rate, which the economy is doing very well, and with the stimulus package coming in, and if the stimulus comes in, inflation comes in, I will probably be looking to increase rates earlier. Then you will see a strength in the US dollar. But if you don't hear that, okay, if you don't hear that and you just hear things like he's still a bit worried about the jobs, let's look a little bit longer, probably will not change anything soon, and then that means that you can expect US dollar to be continuing their current rate of strength. then it will be relatively to the market news coming in on what's going to happen to the US dollar. Is the stimulus package, is the growth going to be, then market investors are going to see whether the growth is going to be as expected as what the US government is expecting to be, hoping to do so as well. So then we're going to take a look at that. So we'll look out for it. If there is a bullish statement, US dollar will be very strong, but I really sincerely doubt so. I think power will stay as status quo. Okay, that is for the FOMC statements coming in. And then is there anything else on the pound? Construction PMI coming in on the Thursday? Okay, 54.6. I mean, there is some improvements coming in. You can take a look at the pound. Jobless claims going to come in as well. Power going to be speaking, coming in. Not so much impact here. This one, not too much as well. Yeah, that's about it until the US dollar comes and call PPI and PPI. But usually this one also will not have much major news impacting as well. So now if we look at the charts here, okay, if we do look at the charts, okay, pound USD. What's going to happen pound USD? Yesterday, we did see that the pound US dollar did weakening for the stock market, and then pound weakened coming in. Really very interesting here, especially when the news was coming in that Boris Johnson was looking into relaxing the COVID-19 restrictions around and coming in. So this could be a reason where it's already priced in. A lot of recovery can see has been going up and maybe have priced in already, and then that's where some investors are just profit taking coming in. However, if you do look at the UK, the only thing economy is that they are still, the UK and the Euro are still talking about financial agreement because of the BRIC exit coming in. The financial market, which controls quite a significant amount. I think it's about 7 to 8% of the GDP financial market there. So is it going to impact up? Then we're going to see. They're going to see how it's going to happen. But however, overall UK is still doing pretty well. I would be expecting still a strong recovery strength in the pound. So however, coming down here, perhaps what would have happened is going to come down short term, coming down a little bit down for in terms of the pound weakness in the Asian market coming in. Probably will not hit my euros my support zones here. Okay, probably will not hit the support zones here coming in, and then a strong a nice probably recovery going all by Thursday, Friday, with the news coming in, the pound news. If it comes news really nice, strong news coming in, data, we'll probably see a recovery all the way probably to even 1.3910. So what could probably wait for it. If it drops down, I'll probably be interested to take if it goes above 1.3835, somewhere here. And then we'll probably talking about 30 pips of stop loss coming in for a probably 70 pips of take profit. Almost 1:2 risk reward ratio for a possible buy trade idea on the pound USD. Now, before I look at the euro pound, let's take a look at the euro USD. Now, euro USD, as you see yesterday, US dollar did overall continue the strength of the weakness, and euro strengthened overall. It hit into my resistance zones of 1.1869. Now, with this hitting a euro zone quite strongly, has been this resistance zone is quite strong since on the March area itself, and we will zoom out further. You can see this level. When it reached this level, was almost on the 20th of October last year. Now, if we were to do so here, what could happen? Most likely, would happen is it will probably be I would think that it will be bouncing off this resistance level, and if it did breaks pass down, it may go down, move down further with the US dollar still looking after the FOMC meeting minutes. If anything, euro is still not doing very, very well. US dollar may strengthen against the euro USD, continuing the medium trend, downtrend coming in. So I will expect a drop. Now, with this coming in, what will happen on the euro pound, right? So, if I were to take a look at this level here, I would think it's going to expect Jean has mentioned yesterday. I think a lot of things has reached to the key level here. If I were to take a look, I think this key level 0.8600 is a major key level that we need to take note of. Okay, so with I was saying that the pound USD probably maybe going down a bit before strengthening on the pound, and the Euro USD coming down, I will go be expecting a bouncing off down of maybe this key level of 0.8600 coming down for the with a good pound data as well. It may shift all the way down maybe to this level here. So looking at this one, if it indeed does drop down below, I would say 8570. Okay, 8570 here. I'll be probably be going for a very tight, nice stop loss of about 26 to 30 pips, and then going for almost again 70 pips of take profit. One is to almost slightly more than 1:2 risk reward ratio coming in. Okay, so overall, we are still looking at a pound, probably possibility of a pound strengthening, provided the data shows in really strongly coming for the coming 2 days. Okay, that's all from the pound.
Okay, thank you, Daniel. So a couple of trade ideas from Daniel here. So just a reminder, any information shared is not intended to be a trade recommendation. It is just the opinion and views of the speaker. So do your own analysis prior to entering any trades. So actually, I have a couple of questions for Daniel with regards to how LCMS traders identify what news events is important. So do stick around to find out how LCMS traders identify which important news are actually ideal for trading. So, but before I pass the time to Daniel, let me get Jonathan here. So Jonathan, a partner in Forex Briefcase. Today, I will get him to share a little bit about what Forex Briefcase is and how it can help you with your investment portfolio. So I'll just fire off the first question. So Jonathan, can you share a little bit more about what a managed account such as Forex Briefcase is?
Hi, good morning, everyone. To those who have met me before, nice to see you again. It's been some time since I have tuned into this call. Okay, so Forex Briefcase is actually a managed account service. What it does is that we actually trade the markets for you, okay, with the same methodology that we have been sharing with you guys. But we understand that some of you do have some difficulty in terms of time. Okay, you may not be able to look at the markets as much. You may face certain psychological challenges when you trade yourself. Okay, no doubt you guys should still continue your pursuit on your trading journey. Okay, and the Traders Club is there to help. Okay, but nonetheless, we also have a Forex Briefcase managed account where we manage your trading account for you. Okay, you don't actually pass us the money to manage. Okay, however, we actually set up the trading account for you. This trading account is slightly different from the trading accounts that you guys are familiar with. Okay, you will not be able to enter trades on your end. Okay, but what happens is that these accounts are linked to our master fund. Okay, where the trades that we entered will be entered on your account as well. Okay, so basically you are mirroring the trades that our trading team has put in. In terms of how you manage your money, okay, in terms of deposits and withdrawals, these accounts will be fully under your name. You need to do your own registration. We only get the account open for you. All deposits and withdrawals are fully managed by yourselves. Okay, any point of time you would like to add money or withdraw money, especially the profits, okay, will be done on your end. Okay, you don't even need to tell us. Okay, it's fully under your control. Also, because it is in your own account, okay, you have a dashboard with on the broker's platform. Okay, most of you with trading accounts should already know this is exactly the same presentation. You're able to track the performance of how the managed account is doing. Okay, I think shortly we will come to share a bit of the features and the results that we enjoyed over the last few years. Okay, and that will give you a better view.
Okay, so I'll just cut in here. Yeah, so in short, managed account service basically is the clients open the trading account under their own name, and then Forex Briefcase just merely trades for the clients, right, John?
Yeah, that's right. So
Okay.
on top of that, to bind the whole arrangement together, okay, we also do have agreement between both parties, okay, that you allow us to do the management on your behalf, and also to share the profits that are being made over time.
Okay, so with a clear understanding of what a managed account is, just give us a little bit more information about Forex Briefcase itself. So how does it actually help investors generate a good passive income?
Okay, I believe the main users of this managed account are two types of people. One are, of course, investors with some capital thinking of how to grow this amount of money. Okay, the other pool are actually, like I mentioned earlier, traders who actually want to make an additional income for themselves. Okay, but they do find some challenges in trading on their own. Okay, so this service is here for you. Let me just bring out two short slides, okay, with some features. Okay, so if you look here, you will see that these are the key highlights. Okay, so this is something that is not crazy risk, okay, or crazy ROI. In 2019, okay, which is actually our best performing year, 1 year before COVID, we actually grossed 47, almost 48% returns. Okay, over 30 months. Okay, why 30 months? Because we have actually operated this managed account for this period of time. Okay, and we have already grossed a 90% return over this period. Okay, that may sound a lot. Okay, and yes, it is a lot for many investors. Okay, however, that actually breaks down to an average of 3% a month. Okay, and as you know, as we manage our risk, okay, 3%, we don't risk a lot to make this 3% a month. Okay, our maximum drawdown is 2.24%, which means in the worst month that we had, in these 30 months, our worst losing month was negative 2.24%. Okay, which is lower than the average returns that you would expect. Okay, in a month that is good. Okay, so let me just bring you to the second page. Okay, which breaks down the month on month the highlights of our trading returns. Okay, on a month on month. Don't pay attention to the graph here. Okay, you will just see a very nice smooth upward trend. Okay, which means that our clients are making money. Just take a look below. What I want you to look out for, okay, is how do we actually say that we have gross average of 3% a month. Okay, if you realize, okay, we, as much as the worst month is a negative 2.24%, we do not actually go through that many losing months. Okay, you look at 2019, 2020, we have about 1 to 3 losing months a year, okay, out of 12 months. And those losing months are kept at a reasonable risk level. Okay, as for the winning months, okay, you see average, you see 2-3%. However, there are some months where when the markets are more quiet, okay, we do not want to take necessary risk. We make a smaller return, maybe less than 1%. However, when markets are trending, things are picking up, we do sometimes even hit 6 to 8%, okay, or 5%. Okay, so it is something that if you realize from our past performance, okay, it is not a managed account. It's not a service that puts you through an emotional roller coaster ride every day while you're facing big swings up and down. You're feeling so happy that you're making a lot of money. Other days you're losing a lot of money. It is something more like a gentle, small growth over time. Okay, of course, some months are better and some months are worse. Definitely, you see the better months are definitely nicer numbers than the losing months, and you don't actually incur. We try to avoid losing months as much as we can. Okay, because the main focus of this managed account is to actually keep risk low and your money safe. Okay, that is our first objective, followed by making you decent returns, okay, over the long run, consistently, as proven over this 30-month period. And that is the objective that we will continue to use moving forward, because that has worked well for both us and our clients. Okay, so I think that's what I have. If you are interested to get on board, Junwei should be posting the links down in the chat. Okay, and I'll be open if Junwei or the floor has any questions. Thank you.
Okay, thank you so much, Jonathan. Yeah, I've just posted the links up on the chat. If you guys want to find out more, just head over to the link and put in your name, email into the form in their website. Yeah, so right now I will get on with the program. Let me mute Jonathan first. Okay, I'll get on to the program. So as I mentioned, I have two more questions for, I think one more question for Daniel. So Daniel, I see a lot of economic news happening throughout the week in the calendar, like PMI, rate statements, FOMC, jobs opening. But actually, what do LCMS traders specifically look out for when it comes to news? Like, do you guys look at every single thing, or it's just the high impact news, the red color envelopes, or is there specific things that you guys actually look out for? Yeah, so Daniel.
Okay, Chinwei. Good question, actually. Good question. So you can see in the calendar there's so many news, right? Let's go back to the calendar again. And if you take a look at the calendar, there's no one. So you can so many news. I mean, we have a guideline of a one bar, one bull, two bull, three bulls. But how sometimes you even take a look at that and say, hey, not much movements have changed. So how do you filter? It's getting a lot of confusion, isn't it? So how do you analyze this kind of news data? Why don't you just come and join the 4-day course? We do right now say, because what we are teaching taught the LCMS traders members, including all our students here, on to which news is most important. I mean, we have catered into about 5 major groups, where business, banks, government, central banks, and so on and so forth, and which of these news for which country, which Europe, like for Eurozones or yen, which one has more impact, we will highlight it out and explain to you more in detail why. So if we do teach that on the 4-day course itself, and all our students learn that, and when they practice, they do understand how to look at the market. So I would really, actually very simple, is to suggest you to go ahead and come into a 4-day course session, right? Because right now, this 4-day course Kickstarter is going on. You learn the fundamentals, also the fundamental trading, but you also will be taught how the profitable strategy of combining the fundamentals and the technicals coming together to be very profitable. And as you just went through the Forex Briefcase, you saw the results there. We're going to teach you what exactly how we trade on the in the Forex Briefcase. As you see, the profit month after month, most of the time it will be profitable for you. So come and join in, and all you need to do is the link will be posted 4-day course lcms.com.sg. I won't talk too much about this, but we'll talk about how to do economic news, trend, support and resistance, but most importantly is to identify. We do understand a lot of the times economic news, economic data, how do you see the data? It's better than forecast, yet why does it move back downwards or got worse, the data weakening, it didn't follow? We will give you a lot more explanation there as well, so that your learning in your trading will be much better. So come into here, and most importantly, on the course is on the live streaming, 20th April and 22nd of April, part 1 and part 2. Most importantly, it is free and it's the evening, so come and join us. You definitely, all these materials and the videos are provided to you free. The coaches are on standby, so we will answer all your questions as well. Okay, so with this, just sign up, join in and sign up. Okay, so that's my answer to you. So just join and we'll teach you how to identify, how LCMS traders identify the economic news.
Okay, Daniel, wasn't expecting that. Yeah, but I think in short, I read the website, there are like 9 economic events, 5 groups. So yeah, if you guys want to find out the exact news that Jean and Daniel uses to actually make money from the market, yeah, join the 4-day course. I posted the link up. And yeah, so we have come to the end of the session today. We will see you guys again tomorrow for the yen and gold analysis. Thank you so much for your time and goodbye.